for precious metal has been central bank demand for gold and industrial plus potential central bank demand in silver. The prices of these commodities can't be evaluated on a fundamental basis like equity share because there is no cash flow, there is no dividend, there is no bonus. You have to evaluate based on perceived value, and as long as central banks continue to buy gold, prices can go higher. If central bank decides to sell, and in the past they have also sold gold, prices will correct. If they even stop their buying, then prices will probably correct a little bit as there is some amount of momentum buying. So if you are investing in gold, every month what central banks are doing.
Understood. So that's one factor, but another factor which is weighing heavy is also the fact that central banks are buying. I understand that, but the Federal Reserve action that we are expecting over the next few months, 25 basis point rate cut in October, followed by another rate cut in the month of December. And for a low-yielding asset like gold and silver, that is also one of the factors which is aiding the up move in precious metals. Your thoughts on how this factor will continue to impact the precious metal market?
So undoubtedly, when dollar weakens and interest rates comes down in dollar, commodity prices get supported. Lower Fed interest rates will be positive for precious metal. Weakening of dollar also will be positive for precious metal. More importantly, as long as the US policy remains unpredictable, like they froze Russian FX reserves in post-Russia-Ukraine war, certainly that kind of unpredictability is pushing central banks to diversify into precious metal. So everything linked to US does play a role in determining precious metal price journey.
Okay, and if we had to talk about your target price for gold and silver, and if you had to recommend one to your investors, what one precious metal will that be?
Well, then you will have to predict what Donald Trump is going to do. And then you have to predict what Chinese and Indian and other central bankers are going to do. Clearly, we don't have that ability. But my limited point again is that if interest rate comes down in US, if currency weakens, it does not result into gold giving this kind of spectacular return. The spectacular return of gold is driven by central bank buying. They are diversifying their FX reserves, primarily driven by the freeze of Russian FX reserves which happened post-Russia-Ukraine war. Now they have massive dollar reserves. They have invested into yen, euro, renminbi securities. But a lot of them are underweight gold as an asset class. In US Fed, about 70% of FX reserves are in gold. In Chinese central bank, it is under 5%. In Indian central bank, it is under 10%. In Japan, also it is under 10%. Now, clearly people want to diversify, and the price up to which central banks will buy will definitely influence gold prices.
Understood. You have not given us a figure, but directionally, if you can tell us, precious metals versus equity, they were outperformed over the last 2 to 3 odd years. What will your outlook be for the next 3 years? Do you expect precious metal basket to outperform going forward as well?
So it's comparing apple to oranges. Equity you can evaluate based on cash flow, dividend, business prospects, growth. In gold and silver, you are essentially taking a call on perceived value. And hence, it's difficult to compare both of them. Both are different asset classes. It deserves to be part of investors' portfolio. We became bullish gold post-2020 and became super bullish gold post-2022. Silver, we turned bullish about 6 to 8 months ago. Now, every month we are watching what is the industrial demand in silver, what's the demand-supply equation, what's the central bank buying. As long as these factors are favorable, we'll continue to remain bullish gold and silver.
Okay, right. Let's also talk about the announcement that you came up with yesterday where you've temporarily suspended fresh subscriptions and fresh inflows in Kotak Fund of Funds ETF. And you've cited 2 reasons. One is that it trades at a valuation premium as compared to import parity, and second is supply crunch. By when do you expect the dust to settle?
So normally the silver prices trade around import parity price. They don't trade at such a high premium. Today there's festival demand, there might be some delay in supply, and which is why physical silver is in short supply and trading at a premium. Our Kotak Silver ETF, being a listed security, does not have suspension or temporary suspension. So it continues to trade on exchanges. Kotak Silver ETF fund of fund, which goes and invests into that ETF, that we have suspended only for lump sum purchase.